The views expressed in this video are those of the panelists and do not necessarily reflect the views of U.S. Money Reserve.
Welcome to America's Gold Authority podcast. My name is Mike Barnes. I am the host, and in the headlines, it has been all about the Federal Reserve lately. And that's going to be the big topic today. And I won't waste any time as we talk to Diehl and Brad Chastain about what's been going on. Because in the headlines lately, President Trump has been threatening to fire Federal Reserve Chairman Jerome Powell. Then he said he would not fire Powell. Then he called for Powell to resign. And as we tape this podcast, it seems he's looking now for cause to fire Powell. Diehl, I want to start with you as president of U.S. Money Reserve and the 35th director of the United States Mint. What is going on?
Well, this is an unprecedented kind of struggle that's going on, and we'll discuss that in a little bit. But President Trump wants the Federal Reserve to lower interest rates. And the Federal Reserve's analysis is that it's too early, that we don't know whether or not inflation is headed down or headed up. We don't know really whether the economy is headed into a period of weakness or whether it's strong. There are indications both directions. And so Chairman Powell has basically been leading a commission that is very focused on letting things play out, and the president is unhappy with that decision.
And Brad, as we've been watching those headlines, as Director of Education for U.S. Money Reserve, can you almost guess what's happening with the headlines just by seeing what happens with the stock market, the economy, the price of gold?
Yeah, you're exactly right. The markets in the short term, day-to-day, week-to-week are very reactionary to what's going on in the news. But as you may have noticed over the last few months, if you look at where things were several months ago to where they are today, you wouldn't have any idea how much volatility there had been along the way. As what really matters over the longer term are what Warren Buffett's mentor, Benjamin Graham, used to call the weighing machine versus the day-to-day voting machine dynamics. And there are really important ones at play we've talked about in previous episodes. Regarding the Federal Reserve, though, today, just simply the threat of independence is an important one, because whether or not Powell remains in office through the rest of his term, which I suspect he will, or doesn't, whoever the next Fed chair is more likely to start acquiescing to some of the policies of the current administration. And that's something to watch very closely. But regardless, the Fed has to be able to deal with the impact of the tremendous level of debt and deficits as well. And so over time, that is something that has to continually be refinanced. More money has to be put into the system. Ultimately, at the end of the day, the Fed is responsible for that. So whether or not it's today or at some point in the future, Fed policy is going to have a tremendous impact on the level of what we call monetary inflation that is going to have to take place to refinance debts along with all of the interest. And so debasement of currency is still going to occur. And that's why it's still so important to have monetary inflation hedges like gold in a portfolio that have a history of being able to protect us against debasement of that fiat currency.
You used the word volatility, which fits in so well with this topic. Diehl, tell us, does Donald Trump have the authority to fire Powell?
Well, no, he doesn't unless he has specific cause for firing him. And that for cause is a little bit vague, but usually what it means is some significant scandal or personal behavior or mismanagement of an organization. And really there's no evidence that that has been going on, certainly not at a level that where Chairman Powell is involved. One thing the administration is looking at is whether or not there's been malfeasance in the handling of some redevelopment of the Federal Reserve building. I don't think there's much to that. But outside of having cause, the president does not have the power to remove Chairman Powell. His term extends until next May, And so presumably he'll just have to wait until May comes around when he's able to appoint his own chairman.
Brad, why would he be in such a hurry to change the head of the Federal Reserve right now instead of waiting till May?
It's really to be able to enact, political policy, to get political or to advance political agenda. One of the big things that the Federal Reserve does, of course, is manage short-term interest rates. And there is a tremendous amount of debt refinancing coming this year. It started a couple of years ago under Janet Yellen, issuing tremendous amount of short-term debt that is now coming due to be refinanced. And Bessent has been pretty clear that he's probably going to continue that policy well into the future, refinancing at short-term rates. So as this debt is coming due this year, keeping those short-term interest rates low is critical to being able to keep interest expense down in their mind. Interest expense is now the second largest expenditure of the government behind Social Security, and higher short-term rates means that they're going to be refinancing that short-term debt at higher rates, and so keeping it down ultimately can keep that expense down is the administration's hope.
Yeah, I'd like to address that too. Absolutely, this is one of the concerns of the administration. They had been expecting that interest rates would have fallen by now. One of the reasons why they haven't fallen, and Chairman Powell's been very clear about this, and I think there's a general consensus about this, is all the uncertainty about the economic impact of the trade policies and the tariff policies. And those tariff policies continue to change. It's not just that the ones that were put on hold come back due for a decision by August 1, right around the corner, but there continues to be new impositions of tariffs. And until the Federal Reserve has a really good grasp on what the overall impact that's going to have on inflation, they are loath to lower interest rates. And the president has wanted that to happen, expected it to happen by now, so that these interest rates charged on the enormous amount of debt that we have, the amount of debt that's rolling over, and this new the beautiful bill that was passed by Congress adds another $4 trillion to that debt. And a lot of that is all going to be coming out here over the next year. And he was expecting the interest rates to be much lower and for that debt burden to be lower. But there's another factor here too. And while the Federal Reserve only sets the federal funds rate, the short-term rate, that rate typically has an impact on 10-year treasuries. And 10-year treasuries set mortgage rates and other consumer debt rates. And so all of us who have been waiting to refinance their houses or to buy a new home are not going to see those interest rates drop until there's a much clearer picture, not just for the Federal Reserve, but for the market in general, about what we can expect over the longer term on interest rates and inflation.
And the 10-year isn't just mortgage rates either. 10-year reverberates across the entire financial market. It's used as the risk-free rate globally, which feeds up into a bigger rate called the discount rate that everyone uses in order to determine asset prices, that being stocks and foreign bonds, real estate, and pretty much all financial assets.
Philip, I keep seeing headlines that the rates will drop down probably in September. Is that just not quick enough?
Well, no, it's not quick enough, and it's not going to be big enough to satisfy President Trump. He's looking for a massive decrease in interest rates. And I think there's growing skepticism, growing doubt that we're going to see a reduction in the federal funds rate in September. I think there's growing doubt about whether or not we'll see a reduction this year at all. And I think those doubts are going to grow as more data comes in about inflation. The reason for that is just in the last reports for the June data, we saw the first signs of an inflationary upward tick in prices. And I think there's a pretty broad consensus that we're going to see more of that in the next several months as companies can no longer hold back on raising prices as they face these higher cost of tariffs.
Brad, why is it important for the Federal Reserve to be independent?
Really, to be able to instill confidence in a country's monetary system and, by extension, greater overall economy. In fact, that's really the only way that the Federal Reserve was able to be enacted back in 1913. Americans at that time were quite skeptical, and rightfully so, of having central banks. Experiences they had had with the first two central banks that existed prior to the Fed here in the United States, as well as foreign central banks. And when there's a lot of control being able to be exerted over a central bank by a government to facilitate a government's agenda, it can wreak havoc and had in the past. So critical to getting the Federal Reserve Act in 1913 passed that established the Federal Reserve was setting it up as an independent body that can act based on the economy, on monetary policy, independent of what the government wants. However, that doesn't to say the governments haven't tried to exert their influence over the years. What's happening right now, there are plenty of examples of where some similar things have happened in the past, not with the same level of rhetoric and the same form of communication, of course, but coming out of World War II, the administration at the time, Congress, was they got very pushy with the Federal Reserve to try to keep rates low to deal with the overall debt that had accumulated during World War II. While inflation was taking off, the Federal Reserve wanted to sort of lower rates. Ultimately, confidence in the Federal Reserve independence was lost during that period of time. They had to come back a few years later in 1951 and establish the Treasury Federal Reserve Accord to reestablish that sort of independence back then. And we saw it later on with President Johnson, Lyndon Johnson, under the Great Society programs with his Treasury Secretary, Martin. He actually got physical at his ranch in Texas with him, pushing him around the room, reportedly, trying to get him to ease policy. He didn't comply, and so it shows that they still did have autonomy. But the most famous example wasn't too much later with Arthur Burns and Richard Nixon. Richard Nixon heavily pressured Arthur Burns to lower rates as they were dealing with the Vietnam situation. And many people attribute that partly to the inflation that happened in the 70s, that Arthur Burns did keep a very loose monetary policy during that time. And he went down ultimately as a very weak Federal Reserve president that every Federal Reserve president since then, or chair since then, has wanted to not repeat. We saw that especially with Powell, he was dealing with inflation. He wanted to take the next Federal Reserve chairman's sort of call that Arthur Burns did of being able to stamp out inflation like he did in the 80s by keeping rates high. So this is a long history of trying to exert political influence. The rhetoric and the way it's communicated directly is different, but this is something we've seen repeatedly throughout history.
And it's great history to know about, to know that it's not unprecedented. So, Philip, don't you think that should help the American morale right now to know what's going on?
Well, it's not unprecedented for presidents to express an opinion privately or publicly and exert some pressure on Federal Reserve chairmen to adopt policies that favor the administration's economic policy. However, this is unprecedented. The way that President Trump has been going after Chairman Powell, calling him names repeatedly calling for him to resign, changing his mind back and forth about whether or not he's going to fire Powell. Of course, President Trump has a megaphone that no other president has ever had, and that is social media. So I don't think we've ever seen the kind of pressure and threats on a chairman that we've seen so far. And the latest the latest tactic that the White House has been using is talk about, and whether or not they're going to do this, who knows. I think it is likely that they will do it, and that is naming who they intend to nominate to succeed um, Powell, and basically making Powell a lame duck, or attempting to make him a lame duck. The reality is that the chairman has a lot of power, but he's only one vote. And there's a committee of people who make the decision about interest rates. And ultimately, that committee is going to work its will and do what it thinks is right by the country for the long-term situation with inflation rates. So I don't think this is going to have any impact on the Fed's decisions. However, I do think it has the potential of having very disruptive impact on markets, on bond markets, and especially if the president does attempt to fire Powell. I think that could easily backfire, and because it's not just that the Federal Reserve sets the interest rates, but they set the interest rates based on signals they're getting from the marketplace. And if the Federal Reserve began, cutting rates at a time in which the market couldn't justify it, then you could see interest rates go up with a cut. As a matter of fact, we saw this very thing happen last fall when the Federal Reserve cut the federal funds rate by a total of 1%, and yet 10-year interest rates went up.
It's going to be interesting to watch this because it's going to affect the whole country. So great insight from both of you. Philip Diehl, thank you for being with us today.
Thank you.
And Brad Chastain, thanks so much for that history that you showed us today as well.
Thank you, Mike. Always good to be here.
That is all the time we have for today's episode. On behalf of all of us here in the U.S. Money Reserve Studios, I want to thank you so much for tuning in. If you have any questions at all or want to learn more about today's episode, you can call the number in our episode description and speak with one of the friendly account executives. They're going to be more than happy to answer any questions you may have about precious metals and the strategic role they can play in achieving a secure and comfortable financial future. I'm Mike Barnes. We'll see you next time on America's Gold Authority Podcast.
The markets for coins are unregulated. Prices can rise or fall and carry some risks. The company is not affiliated with the U.S. government or the U.S. Mint. Past performance of the coin or the market cannot predict future performance. All calls recorded for quality assurance. Offer void where prohibited.